Hello, hello. This is Victor from TRADEPRO Academy. I welcome everyone here in the room that's waiting for us. We are going to start our first live day trading course here on YouTube, lesson 1 out of 6. So, hello, hello. I hope everyone's very excited for that. We are going through just a condensed version of what we do actually provide in our futures day trading course. So again, this is a sharing space. So if you guys have any questions, just drop them below, and I will uh, love to answer them throughout the course of the next few weeks for this course. So we're going to be doing 1 to 2 lessons a week. Emails do get sent out, and I hope you guys are ready. This is the introductory lesson to the futures course. Now, the day trading course actually. So we're going to be talking a lot about day trading throughout this course. First, in today's agenda, who are we? What is day trading? What assets to day trade? And what you need to know before you get started, how to start, and then finally an introduction to the futures market and day trading. Now, first, I want to give you a little piece of information about myself and Trade Pro Academy. So, of course, Trade Pro Academy has been around for a while. We do cater mainly to day trading as of now. We day trade live every single morning as the US market opens. We have 3 day trading sessions actually throughout the day, one following the 11 a.m. Eastern close of the first trading session for another hour, and then in the evening. So in the evening, we do trade the futures markets where there's plenty of opportunity. That's what we're going to talk a lot about today. But let me tell you a bit about myself. So you might have heard me multiple times throughout YouTube. The Freedom Grind, good morning. Welcome. I hope you have a great day as well and a great time here watching this course. Now, you probably heard my voice multiple times. I'm Victoria from TradePro Academy. I recently did graduate from college and have been a full-time trader for a while now, even throughout college. My journey has been anything but easy in the markets. I did manage to start very early. I was lucky enough to find TradePro Academy in the early stages of my career and just went for it. Haven't looked back. Always loved the financial markets, but I started trading options actually in about 2015, which was quite a bit of time ago now that it's 2020, so about 5 years ago. Started trading options, did okay, but it was more of a swing trading basis, and I wanted something more active. There were a lot of things out there in terms of day trading, stocks, Forex, whatever it may be, even options, but nothing really made that much sense until I dived into actually the futures market. So the futures market, I've been trading it for about 3 years or so. Been trading it throughout all of college and sporadically through college, but I learned all the fundamentals and all the basics. And now that I actually have the time to trade full time every single day, the growth has been exponential. Now, what I want to express to you guys is that you don't really need all the time in the world to actually day trade the futures market or even learn how to day trade the futures market. If you set about an hour a day, you can achieve a lot because the futures market is open throughout the whole day minus 1 hour between 5 and 6 p.m. So there's plenty of opportunity. You just have to make the time as I did. Now, I've been working here with Trade Pro Academy with a lot of successful traders, and I've seen so many different people flourish and grow. And what we do at Trade Pro Academy is trade futures in the most basic way. So I'm not going to complicate anything for you guys. I'm going to show you exactly what we do throughout this course to make it very eye-opening for everyone. Now, first, what we're going to go through is just what is day trading, right? We're going to go through some of the basics here so everyone really understands and gets a better perspective on what happens. So we tend to start the day with cash and end it with cash. So day trading is getting into positions of financial assets and exiting those positions in the same day without holding positions overnight. This really mitigates a lot of the risk held overnight, but the overnight session, especially in the futures market, is just an hour, which margins do increase. But the idea is there is a lot of uncertainty no matter what you day trade, whether it be stocks or options. Once that market closes, it can gap higher or lower against you or for you the next day. So, again, day trading is just ending the day with closed positions. So, the length of positions during the day is super arbitrary. You can have very long holding periods in the day trading world, long could be considered hours, or very short ones, minutes to seconds, which could be considered scalping. So we are somewhere in the middle, depends on your trading style, but I personally do not like to hold positions for even hours. Um, the my mantra is 2 hours a day, that's all it takes, and you can make your profit targets. Now, investors tend to hold positions for long periods of times. They might look at daily charts such as the one on the screen right here. Um, when day trading, it's very important to understand how to read any market at any time frame. So if you can be a good day trader, that really does help you in your investing career with technicals, fundamentals, and everything. Now, looking at a daily chart should be very well cemented in even a day trader's vocabulary because you have to know some key levels if price is approaching them. So if you start with a daily chart during the day at the beginning of the session, to identify those key levels will help you significantly. And then you can drop into 30-minute charts, lower time frames to start executing depending on your holding period. And then ultimately, this is gold on the screen. We go into tick charts. In the futures market, especially, markets move tick by tick. So tick charts are super, super important, whether they're number of trades, volume, or just general range bars. So we really, really like those. It really shows a lot of the price action very clear, and we're going to dive into a lot of that throughout this course. Now, when you consider day trading, I know a lot of people just don't know what assets they should day trade and why. There's a lot out there. I know a lot of people do start with stocks or Forex. Those are the main two that are very widely known, but I feel like people don't understand the pros and cons in a lot of these different assets. The futures market, again, very lucrative day trading, probably the most successfully at least day traded market in the US. A lot of prop firms center around futures trading. And then you could also day trade options. Now, which one of these may be the best, maybe the worst? It really depends on you and your personality, but what we're going to do here is just show you an unbiased view of pros and cons of each and show you why actually we prefer the futures market. Now, the pros and cons of Forex, very easily explained. Pros, it's very low cost. The capital requirements are very, very little, which attracts a lot of people. Now, in the futures market, again, cost may be low, but with the introduction of the micro contract on the equity front, you can mimic a lot of what Forex does as well, and and how Forex attracts people. So I've noticed a lot of Forex traders, especially in Europe, have started to transition towards the futures market based on the new micro contract. But Forex is great because it has low cost, little capital requirement, high leverage, very opportunistic in news events. It moves like crazy. So if you can catch those moves with limiting the risk, then you can have insane profit. Now, it's a 24-hour market, so again, open around the clock. There may not be movement all throughout, but it presents traders with a lot of opportunity no matter where they are. It's pretty liquid, and the tax rule is pretty tax efficient, especially if you're in the UK, you know, spread betting, so it's not really, it's kind of tax exempt, but even in other parts of the world, maybe capital gains or whatever it is, it has good tax benefits. Now, some of the cons are that there are pretty widespread sometimes when it gets super volatile. So you could be in a losing position the second you enter it, even without really the price moving too much. It's very heavily manipulated on the manipulation front based on central banks and big players. There's really high leverage, so leverage could be a double-edged sword, as you guys can see both in the pro and con section. And it's very sensitive to news. Some might consider this a pro, others might consider it a con. So that's why we have, again, in both categories. And it's not centralized, so very few regulations, which allows the manipulation. And the non-centralized portion doesn't allow for large volume order flow or just centralized volume order flow, so you can see actually what is happening and the interest between the supply and demand. I know a lot of people use technicals and price action to identify those supply and demand price points, but it'd be a lot more efficient if you could actually see the order flow of the asset. Now, it's a kind of a disadvantage to smaller traders as well. There's an A and B book in Forex usually. Brokers usually divide their clients between A clients, B clients, and their A and B books. The B book is clients who tend to lose while the broker does take positions against them. The A client, usually the winners. Now, When day trading stocks, again, there are pros and cons. The pros are that it's centrally cleared. There's a large variety of stocks, but I feel like the cons outweigh the pros when day trading stocks. I love equities. I love investing, longer term swing positions, but personally, day trading stocks is maybe not the most cash effective. There's a pattern day trading rule in the US, so if you're not in the US, you shouldn't really care about this, but you need a minimum of $25,000 in your account to day trade if you are in the US, day trade stocks that is. So large capital requirements, margin does depend on brokers, and it may be very difficult to find opportunities without right screeners. The market hours may not work for you because the most liquidity is usually in the US stock market, and if you are outside of the US somewhere or maybe not the best um, time zone, depending on your work, your normal day job, stocks may not work for you. And again, obviously not open 24/7. Now, when day trading futures, without bias, I do believe that the pros heavily outweigh the cons. It's open 23 hours a day minus the weekends. It's very liquid. There's multiple different markets. The S&P 500 futures is the most liquid futures market other than the T-bonds, and it's traded worldwide. There's a lot of movement even throughout the evening. There's a lot of news opportunities, so volatility comes in, but it's not obscene, and there's no real spread widening as you'd see in Forex. Low margin, depending on the broker, obviously low cost, and there's crazy leverage. It's regulated, so centralized. You can see the volume, the order flow of everyone in the world. Good brokers and low commission and micros for the new traders. So like I said in Forex, the micros is a great step forward if you are trying to learn the market but also need some skin in the game rather than playing on sim for too long and learning bad habits. Now, some of the cons, it could be pretty volatile. When news comes out, the volatility may be super sporadic and really shake some people up. Leverage, again, can be a double-edged sword, just like any other leverage in any other market. Now, when trading options, day trading options, this is the one that I recommend the least, honestly, for everyone out there. There are a lot of pros, but I think the cons outweigh them heavily. Lower capital requirements, high leverage, news event opportunities, especially if you're doing directional strategies, and there's a plethora of strategies you guys can take advantage of. Now, some of the cons, volatility equals spread widening. Again, kind of like Forex, there's time decay that you have to consider. There's strategies that can be confusing. Just because there's a lot doesn't mean that they all make sense. The stock selection for opportunity, again, you're going to have some really good screeners or follow a certain list of stocks consistently. There might be some liquidity issues depending on the stock that you might be looking at and the Greeks. So the Greeks complicate a lot of things, which may not be the best for day trading. Now, what do we trade? What is our favorite market? Like I've said time and time again, a lot of you guys may be familiar with this, but we are futures traders. We love to trade the futures market because there's extreme liquidity. You don't have to jump around looking for different assets. There's mainly like 3 to 4 assets that will trade consistently. Me personally, I even narrow it down to two, the S&P 500 and the crude oil market. There's going to be opportunity throughout the day, no matter the time, no matter the day. There, you're going to find at least a few trades. It's very low cost, easy to scale up. Finding market structure, finding a market structure strategy is pretty easy. It's very, very simple on a lot of the assets because of the high liquidity, and there's opportunity for really high returns on a small account, as we'll see very shortly. But I wanted to illustrate what a opportunistic day looks like on the S&P 500 here. This is up until 2 p.m. The open doesn't even show, but look how many moves there are. In the S&P 500 market, 1 point is equal to $50 a contract. So right here, I've shown some X's. You can see the market structure is very clear to the downside on this microstructure move right here. Some of the X's indicate potential areas of interest. So a rally may be back into the first X up here for a continued move lower. There's some support, other support structure. It's very, very well defined. And again, a $50 move is equal to 1 point. So if you're getting 4 to 5 to 6 points a day, you've easily made a solid profit target of $200, $300 a day. It's very, very simple to read the market structure, and there's a lot of opportunity throughout the day. Even if you don't catch all the moves, you can catch a few really good moves due to the liquidity. Now, what do you need to know before you actually start day trading? There is a lot to know that a lot of people are not aware of because they just don't have the right people behind them telling them what they actually need. So that's what we're here. There is a learning curve. That is the most important thing people need to know when day trading, especially in today's day and age. A lot of people get kind of trapped in due to the potential of all these crazy profits. Money's easy, it's fast, and so and so. So like this is the hardest easy money you'll ever make. And that's due to the learning curve. You guys have to put in the time and effort to actually understand the markets, find strategies, find something that works for you, and implement that with practice, back testing, whatever it may be. Now, another thing is you guys have to treat it like a career because this isn't something like a hobby to the side. It's just professional day traders, successful day traders treat this as a really, really stern full-time job or like a career, even though they might only be working an hour a day. Treat it like a career in terms of the learning curve that it takes to get there. So it's going to be hard, it's going to be difficult at the beginning, but if you grind through it, if you understand what you're doing, if you review your mistakes and better yourself, then this is when the most lucrative career you could possibly find. You can just sit at home, trade for an hour, make your daily income, do whatever you want, but to get there, you have to put in the work. Now, another thing is a lot of people, especially when day trading, look for this holy grail, maybe some magical indicator, some magical strategy. Don't look for a holy grail because it doesn't exist. Learn how to read the markets and you will win. Understanding how to read the markets effectively takes you such a long way that you won't even be looking for indicators, holy grails. Personally, I don't use any of those. I just pure market structure and order flow, the backbone and the bare bones of the actual market and how things actually move. If there's more buyers than sellers, it'll go up. If there's more sellers than buyers, it'll go down. And once you realize that and are able to identify that, then you will go a long way in these markets. Next thing you need is screen time. You need so much screen time to be able to read the market's patterns, everything. You really need to cement this in your minds because this is very, very important. Um, just looking at screens maybe like 30 minutes a day won't really get you that far fast. But if you can allocate certain hours of the day to actually practice and implement the screen time, whether it be in the evening or in the mornings, whenever, if you put in that grind, then everything will become super clear. It doesn't take that long, maybe a month or two of really intense screen time, and you'll be able to read any market. But that is a very important factor here. And luckily for everyone who's trying to day trade, the futures market are open overnight, just close between 5 and 6 p.m. Eastern time. But any other time you can go back, read the markets real time, read the previous session, the previous day, whatever it may be. Another thing you have to understand is that you are a perma student. You're forever learning in this industry. Well, the second you say you know everything is a second that you failed yourself. Understand that market structure is king. Market structure is the basis of all price action movement, and price respects it. Doesn't mean it has to trend forever, but once you identify those areas where the trend breaks or can continue, you will go a long way. Finally, you have to understand that psychology is a massive part in day trading, especially day trading futures. The psychology behind being able to generate money or being able to um, risk money for the opportunity. There's a lot behind it, and you have to understand that bettering your psychology will make you a lot better of a day trader. And of course, the trading plan. Have a plan, trade the plan. Now, how do you start? What you'll need is a platform and broker, education, practice, 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 and then a scaling plan. So maybe you're practicing, so you go demo and then you switch to the micros, then the minis in the futures market. You also need a trading plan. As you develop this skill set and you're practicing, develop a trading plan that makes sense to you in terms of what you're watching for strategies, so on and so on. In terms of a platform and a broker, again, we'll go through this very shortly, but we recommend AMP and Sierra charts if you're trading futures. So in this little intro to trading futures, we're going to go through a few things. What are futures? Who participates? Contract specs, margin requirements, and trading software. So this is a little intro to actually day trading here in this lesson, and we'll cover much, much more throughout the rest of the course. But first, what are futures? Obligating the buyer to purchase an asset or the seller to sell an asset. So it's an obligation rather than an option with options contract. Um, a lot of the assets could be physical commodities or they could be cash settled. Physical commodities include oil, any of the soft, so like corn, orange juice, whatever it may be, gold. Some of the cash settled assets are equity assets, so the S&P 500, Nasdaq futures. It's a financial instrument, and the predetermined future date and price is what you base your settlement on into the actual expiry of that futures contract. So futures contracts expire every month, every 4 months based on the equity assets, but every month there's an expiration, and at that expiry, if you are holding onto your futures contract, most brokers will either liquidate you or ask you if you want to hold it. But if you are holding onto that, you do get delivered the asset or you get it cash settled. Now, there's standardized size and specs that we'll go through, and it's transaction guaranteed. Some of the market participants include hedgers, institutional money, and speculative money. Now, a lot of these institutional and hedgers are the ones that move the market because they just push volume and push inventory into the market, which is what makes the market move. Now, the speculative money, again, proprietary companies, these guys are in it just for the cash, making money, speculating where the futures market will go for a profit, essentially. And where we lie is the retail trader crowd right here. Retail traders get a bad rap because they are usually on the brunt end of the trend and kind of catch the stop losses. But you don't have to be a big size mover to actually make money in this market. A lot of retail traders do, and they do that by actually following the big money. So it's better to be a sheep in the market than try and be a wolf with a 10 lot when you're fighting someone who puts thousands and thousands of lots in the market and actually makes it move. Now, for the contracts, so futures contracts. There's futures contracts for everything, honestly. Equities, which include the S&P 500, Nasdaq, Dow Jones, Russell. There's also other equity markets throughout the world, so like the Osaka Exchange, multiple other equities which are all cash settled, and then commodities, which include energy, metals, softs, and more. So energy, again, crude oil, nat gas, gold, silver, softs, they were more liquid before, but they do hold some liquidity. There's a lot of hedging going on in the softs, but a lot of the main assets that we like to trade would be crude oil, gold, and the S&P 500 market being the most liquid out of all of these. Now, some of the contract specs. These are really, really important to know because you need to know what you're getting yourself into, how much money you're risking or making. Now, the tick value for the S&P 500, everything's laid out here. It goes a quarter point per tick. Every tick is $12.50, so $50 to a point, and it expires quarterly. So it's open for just under 23 hours a day and financial settlement, which means it's cash settled. So again, to that point, 50 times the index, so $50 a point. If you're making 2 points on average a day, that's $100 in your bank, and that could be done within seconds even in this market. Crude oil, the tick value is 1 cent per tick, $10 per cent. So one tick increment movement is equal to $10. Monthly expiry, open the same hours as the S&P, and this is physically settled in terms of actual barrels of oil. So if you hold the contract through expiry, you may get delivered a few thousand barrels depending on how many contracts you hold through that expiry. So be very careful with that. Usually the broker will liquidate you as it's coming into the expiry month, the expiry day, but crude oil moves very, very quickly and has a lot of opportunity, can move 30 cents at a time, which if you do the math is about $300 on one contract. Now, what is margin? It's the portion of capital you actually need to make a trade. You don't need the full capital to make a trade. So you'll see how leveraged the futures market is very soon and how much money you'd actually need to trade a one futures contract without this margin. So losses and gains are 100% to own, and leverage is the ratio between margin and exposure. So if we jump into the S&P margin table, you'll see that the S&P 500 one contract is $50 times the index. So if the index is 3,300 times 50, that's $165,000. So if you needed no margin to actually day trade, you had to actually put down this capital to day trade one contract, you need just over $150,000 to actually trade one futures contract. So, but it's very well leveraged. The margin is incredible. As you can see down here, day trading margin is actually $400. So it's 325 times leverage. Maintenance margin is the margin you need between 5 and 6 p.m. Eastern time when the market is actually closed. $6,600 for that 1 hour because it can gap lower, gap higher. A lot of uncertainty, especially around a lot of these news events. It used to be around $4,000 for the maintenance margin, but brokers bumped it up due to increased global uncertainties. After that 6 p.m. reopen for the Globex session, it drops down to $400 a margin. So a great example to illustrate what you can do with this margin, money, and leverage. Let's say you have $5,000 in your futures account, right? And you purchase two ES contracts, two S&P 500 contracts. This requires $800 of margin. So you need only $800 in your account to actually trade two lots or two contracts. We recommend a little more, some cushion room. So if you get a 5-point move higher, so you're long, you've already purchased these contracts, and the market has moved 5 points to the upside. 5 points times $50 times two contracts is $500 of profit. So you sell those two contracts, you're back to even, break even, flat of the position. Now your account balance is $5,500. That is a 10% return, which is amazing. This could be in minutes and seconds, whatever it is, but the leverage in the futures market allows for these incredible profits. That's why we love the futures market. It's very opportunistic. But again, it can go the other way. So you have to cap risk and keep risk very, very managed throughout your trades so you don't make mistakes like these. Now, if you're making about $500 a day, you shouldn't be risking $500 a day to make that much. Otherwise, in the long run, there will not be consistent gains and growth in your account. Now, when we rewind it back to what kind of day trading software and data you might need. So again, a good broker is AMP Futures. That we actually have VIP pricing with them for commission. They have very low margin requirements, very low commissions, and they're a great futures broker. In terms of platform Sierra Chart, we really like Sierra Chart. It's very cheap. It's a little archaic. It looks a little 90s, but it really, really gets the job done. It's got some great features on it. You can do anything. We've customized a full-on chart book, which our members do get, so they don't have to go through the hassle of creating their own charts. And in terms of data feed, two data providers we really like are Denali through Sierra, actually, where you can see the full book on Sierra. I mean, the full book on the actual equity market. So you get more than the 10 best bids and the 10 best offers. You get about 200, which is amazing for order flow and inventory trading. And then CQG, a little cheaper version, but it also is really good. It shows you the 10 best bids and 10 best offers. Now, this is what an AMP brokerage statement looks like. You'll see it's broken down, total fees and commission, everything is broken down here for you guys, realized profit and loss. So if you guys are looking for futures brokers, look no further. AMP is your broker. Now, in the next lesson, this was just an intro to the futures course and day trading. But in the next lesson, we'll be going over charts. So reading different charts, which ones we use, intro to trends and structure. So I just wanted to introduce you guys to this futures course, this day trading course that we are going through for the next month or so on a weekly basis. It'll pick up very quickly, but I really wanted to cement this knowledge in your minds before you actually get started. So this is Victoria from TRADEPRO Academy. I hope you really enjoyed this presentation, and I open the floor to anyone that has any questions. We'd love to answer them, and go check us out if you want. You could even email us if you have any questions later on, and we'd be happy to help. So thank you all for joining me. If there are no questions, we will continue with this, and we'll see you guys next week.